Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a long weekend of a 4-day close due for Easter, the Australian dollar has managed to reclaim the top side of its range around 69 cents after much weakness and good demand from the bottom side of the range around 68 cents. As tension in the Middle East continues with the US-Iran developments keeping traders cautious. From last week's data, the non-farm payrolls advanced beyond the forecast of 65,000 and printed 178,000 jobs added, with the prior revised down from negative 97 to a negative 133, while the unemployment dropped from 4.4 to 4.3. Looking at this week, rate expectations in Australia firmed as renewed reports from economists leaned to a 4.35% increase at the next meeting, which is on the 4th to the 5th of May, with further tightenings priced in towards this year and next due to the high inflation. Meanwhile, the focus is on the durable goods this week and also on the FOMC minutes and the GDP and the jobless claims and the inflation print, which is the Fed's preferred PCE index. Looking at the technicals, though, I'm still a little bit cautious, feeling that the market may actually drop back towards the bottom side of this 68-cent mark. Technicals have not fully confirmed the recent advance, and the MACD is still somewhat lackluster. Turning to the euro, I'm still a little bit cautious, and I feel there may be another down test, and if so, could be looking back towards that 114.5, and still keeping in mind the other key support, which is at 113.5. But the technicals are a little bit firmer on the broader case. Let's keep an eye on the RSI and the MACD just in case we do see that drop. The dollar yen, well, the market is still a little bit cautious of retaking that 160 handle after the recent try found a negative candle and follow through into the third day before bouncing. With a hanging man here, I feel the market may again find good supply, and if so, a bull trap above 160. Still viewing that the market could drop back to 156. With a downtrend in play here for sterling and comes in roughly around 133.15.35, could put still further pressure on the downside, even though the market does look a little bit firmer into the second day. Overall, though, the market may actually drop back towards that 131 and reassess. Finishing up with commodities, we're into the third negative day as the market again finds weakness and still lacking the momentum to rally, and therefore could see a drop back towards the bottom side of 4,400 and reassess. Oil, well, the market still remains above 100 as there is still much tension in the Middle East. Nevertheless, I still feel that we could see one of these candles again and see a very sharp turn from around that top side where we've recently seen. I'd rather keep out though because I still don't have a strong view, so it's safer to say wait for better opportunities. That's a wrap. Thank you for joining me, and as always, look after the interest report. I hope you enjoy the great start to the new week.